What's up, everyone? Rose Brown, the accountant therapist here, and happy Tuesday. Welcome to another Tax Tip Tuesday Live. The conversation today is going to be rather interesting. It affects a lot more people than they realize, right? And really, the topic today is concerning the beneficial ownership information under the Corporate Transparency Act. And a lot of you know it as BOI. So I want to cover the ins and outs, the why, what, where, when, how, all the good stuff concerning the BOI. This way you understand what is required of you if you do have a company, because this is very serious. As I talk about the fines and penalties, you definitely want to make sure that you're zoning in, right? With that being said, I am the CEO of Brown's Advisory and Accounting Firm, where we provide an array of accounting services, including consulting, taxes, all the good stuff, right? With individuals and businesses. So if you are needing to reach out, you can certainly do so through our website at www.brownsfc.com, or you can send us an email at info@brownsaaf.com. Okay. So I just want to quickly touch on what we discussed last week, right? In the last video, especially because we talked about businesses last time, right? And today we're technically talking about businesses, but from a different perspective. So last week I talked about the different tax entities and of course the tax impacts that come with them, the due dates, the ins, the outs kind of thing. So if you've not yet seen that, definitely check it out. And per usual, if you have any questions, let me know. Okay, so because today's topic is so involved, I definitely want us to just go ahead and kind of jump in it. I'm really excited. So again, we're talking about the beneficial ownership information reporting under the Corporate Transparency Act. And the first thing that I do want to know, because a lot of people have this very confused or misunderstood, if you will, this is not an IRS reporting. Okay, this is not a income tax issue. This is not a sales tax issue. This is not a tax issue, right? So it's not, the IRS is not overseeing what's happening here. And it's also not the state annual report. So a lot of states, they require businesses that are registered there to do annual reports. This is not what that is. This is independent, completely separate. In fact, it is governed by the Financial Crime Enforcement Network, and that is long for FinCEN, right? And I don't know if you've ever heard of that sector of the government, but they pretty much govern international activities, right? And this is something that really started back in 2021, and there's been a lot of back and forth in the courts. I mean, it's been really involved and a lot of changes has taken place. So even after today, after this information has been released, it is very possible that, in the coming weeks, there may be some changes. So definitely make sure that you're kind of keeping an eye out, right? And especially if you have a company and this is applicable to you, I did put 2 links on this in the details so that you're able to go directly to FinCEN's website and also see if you are required to file, which I'll be talking about, right? All right, so let's go ahead and cover the what, why, who, when, where, and how. And I'm going to start with the what, because this is always important to know what is happening. Now, the Corporate Transparency Act was enacted to enforce transparency among businesses, requiring that beneficial ownership information to be filed with FinCEN. Now, it's pretty much reporting the company and the beneficial owners. Right. And when it talks about transparency, it's really in terms of who's behind the operation, who's calling the shots, who holds influence over this company. For example, who hires, who fires, who's making the major decisions concerning this company. So what it's looking at is the individuals who ultimately own or control the company. OK, now, the why of it is, honestly, it's kind of simple, but it's one of those things where, are you serious? But pretty much the reason for this is to combat money laundering and illegal activities. So a lot of times, unfortunately, there are folks international who establish companies here. They're not on paper, they don't own the company, but they're still the ones that call the shots for a lot of things as money's flowing in and out of the company. So really, they want to know, who are these people, right? So ultimately, they want to make it difficult to conceal illicit activities through anonymous corporate structures, right? Now, as we look at the who of it all, there's 2 parts to it. So you have the reporting companies, right? And then you have the beneficial owners. And I'm going to break down what each of these are, because this is something that you do need to know as you're filing this, right? Now, reporting companies, this is applicable to both domestic and international companies that have been registered to operate in the United States. So when I say domestic, that's any company that has been registered to do business within the state. So if you're, let's say in the state of New York, you registered your company in New York, you're a domestic company. International, let's say you have a business in Ireland, and then you establish that business, or say, hey, Delaware, I want to establish another location here. That's an international company that has been registered with the Department of State. Okay. Now, when I say companies that are registered with the state, I am referring to my single member LLCs. I am referring to my multi-member LLCs, LLPs, corporations. Really, this is generally applicable to small businesses. So a lot of the people who are being required to do these filings aren't on the larger scale, right? They're under these umbrellas, if you will. So you want to keep in mind, hey, if I have 3 LLCs, that means you have 3 of these filings to do. So you also want to be strategic and mindful about establishing different companies, right? Now, with regards to exceptions, right, there's about 23 entities that are exempt from, not entities, business types that are exempt from this filing, right? But really, this is publicly traded companies. Publicly traded companies, they already have their special reporting that is required. So they're already under some type of restriction, right? And then nonprofits that are tax exempt, they too are not required to do this filing. And certain large operations like banks, right? So again, those types of larger companies, they already have certain types of reportings that they have to do. So this is not something that they are subjected to. Okay, so we just talked about the reporting companies. In terms of the beneficial owners, that's 3 types of individuals, right? And one person could really play the role of several of these at the same time. But ultimately, the beneficial owners, they're any individual who directly or indirectly exercises substantial control over a reporting company. Or it could be a senior official, right? It could be someone that's just making important decisions within the company. Again, can you hire, can you fire, those sorts of things. And this also includes any person who owns or controls at least 25% of the ownership interest of that reporting company. Okay. And then lastly, we have the company applicant. So that's the person who established the business. That could be the attorney, or that could be you if you're the one that said, you know what, I am going to the Department of State website and I'm going to establish my LLC by myself. You're the company applicant. Now, fortunately for company applicants, their information is not required on the BOI filing if it was before January 1st, 2024, that company was established. Okay. All right. Now, a big piece of it is the when aspect, right? When do I have to file? When am I required to do this filing? Now, in the past, and even now, it's still it depends kind of thing, right? So you have to pay very close attention to this part. And I'm gonna kind of sandwich it as I talk about the when of it, right? So there was quite a bit of back and forth in the courts pretty recently between December, thereabout, and February. And they established a new deadline in February for unfiled reports, which is now March 21st, 2025. So you can imagine that's only a couple of days from now, right? Now, prior to this new deadline, it was voluntary prior to this deadline, right? But they did have a hard cutoff. It was only voluntary because it was in the courts and they weren't sure if BOI was going to be a thing anymore, or if it's not, those sorts of things. So that's why at that point it was voluntary. But prior to that period, they had hard dates for when these things are due. And I'm actually going to go through it so that you can hear and understand, and also see the different time periods that are going to be applicable to you in the event something else is required. Right. So ultimately, if the business was registered prior to January 1st, 2024, you would have you would have had until December 31st, 2024 to file your initial BOI report, right? And if the company was registered after January 1st, 2024, you would have had 90 days to do that initial reporting once you were registered with the state. However, starting January 1st, 2025, that 90-day time frame came down to 30 days. Okay. Now, this here, again, don't get it mixed up with any other reporting, because this is completely different. This is not an annual report. I'm going to repeat that again, just in case. This is not an annual report. The BOI is not an annual report. Instead, it is something that you filed only when there is a change, right? So pretty much the first time you file, that's to let them know, hey, this is the company, this is where it's located, this is who's running it, this is who calls the shots, right? And in terms of changes, you want to make sure that those are filed within the time frame, which I'm definitely going to let you know. But ultimately, if you move, if the company moves, if there's a name change within the company's name, your name, if there's ownership changes, that could be, hey, the partnership now has 3 members instead of 4, so you got to let them know somebody's no longer here. Or if it was 2 before, now you added another one, there's another person who has, financial interest or authority over making certain types of decisions within the company, right? Now, whenever there is a change within the company, anything that I just mentioned a while ago, you will have 30 days to file your report with FinCEN. Okay. Now I won't say they've been lax with this, but the back and forth in the courts has caused this time frame here to kind of be softened. But after this March 21st deadline, you definitely want to make sure that you're taking this 30-day filing requirement very seriously. Okay. Now, the question then becomes, well, where do I file this? Right? So the filings are done on the FinCEN website, which again is governs international activities. Like I said, I did put a link in the description, so you're able to just click on it and go ahead and do the filing if you are comfortable doing so. Right? So these are the items that you would need if you are deciding to go ahead and file it on your own. And even if you're not filing it on your own, the person filing it will require this particular information. So that's really the reporting company, its full name, full legal name, its address, the state it was registered in, the residency state, the EIN, and then of course the beneficial owner and the owner applicant, right? So we're looking at the full name, legal name, of course, date of birth, address, if you have a passport or driver's license, but they do need some type of identification on there, or if you have a FinCEN identifier. Okay. And to complete the BOI filing, which is pretty simple, to be honest, you would simply just go to the website, to the FinCEN website, and navigate to BOI. All right. And it is free of charge. So you don't have to worry about how much you have to pay for it to be filed. Now, of course, if someone is assisting you to file it, they will charge a fee or may charge a fee, and they are the ones that you would have to pay. But there's no fee associated with filing through FinCEN site. Now, I know a lot of folks, they like to kind of push to see it. Well, what if I don't file? Do I really have to file? How would they know? Or if I don't file, what are the implications? Right? So this is what I want to touch on, because this is very important. Don't think that you can just not do what you're supposed to do, essentially. Right? Because this is a very serious thing. They take money laundering extremely serious. So in terms of the implications and the fines, there's civil penalties up to $500 per day. I don't know about you, but $500 add up rather quickly. Okay. And then you have criminal fine of up to $10,000 and then possible imprisonment for up to 2 years. Okay. So you want to just kind of be mindful of these due dates. They may give you a slap on the wrist and say, hey, you know what? You were supposed to report, but you didn't. So, this is just a friendly reminder. They may be doing that in this early stage of the filing, but you want to make sure that you're taking this very seriously. Okay. And they have reported that folks are filing these fraudulently. And per usual, we know anything dealing with government fraud, just enters in, right? So with regards to your personal information, just make sure that you're safeguarding that. You're not just sharing it with any and anybody. Okay, so that covers it all in terms of the BOI, the ins and the outs of why, what, where, when, and how. Okay, so I just want to do a really quick recap. Pay very close attention to the due dates. The time is very sensitive. You don't want to miss something and begin to pay $500 a day. I don't know about you, but I don't want to do that. And remember, this is applicable to state registered businesses. So if you have a business that is registered with the state, you are required to do this filing. This doesn't include sole proprietorship, so keep that in mind. So if you are just a sole prop, just continue being a sole prop, you're good. But if you're a multi-member LLC, a corporation, single member LLC, as long as you're registered with the state, and remember there are a few types of businesses that are not required to do this filing because they have other types of filings that are required of them that kind of flows with FinCEN's reporting requirement. Okay, so you want to make sure that you be very strategic whenever it's time to establish, open, or continue maintaining multiple LLCs. So if you have a lot of businesses, you may want to strategically get it together. I would say strategically get it together. And ignoring these is not an option. Like I said, those penalties, fines, they add up very quickly. You don't want to play with FinCEN, right? Again, this is not an IRS thing. Not saying, but this is not an IRS thing. So you want to keep that in mind. This is not a state thing. This is a completely separate section of the government, okay? And like I mentioned before, after the launch of this video, there may be additional changes as they're still new in the landscape of things, right? And as I just mentioned, they were in the courts a couple of weeks ago, and they may very well enter there again, who knows? So you just want to make sure that you're keeping an eye out, but ultimately the due date for this here, the new deadline, if you will, is starting with that March 21st. And if you establish a company anytime after that period there, or whenever this year, you have 30 days to go ahead and do your initial filing. Again, there are details in the description to help you navigate if you're exempt or eligible to be exempt from this filing here, which again, if you're a small company, a small business, most likely you may not be, but the possibility could exist, okay? With that being said, my name is Rose Brown, also known as the Accountant Therapist, and it was a pleasure, and I look forward to doing the next Tax Tuesday.